Kia ora koutou and welcome to Markets, Mystics and Mayhem, a weekly podcast with Kiwi Bank's economics team alongside the occasional special guest. We'll delve into the data, decipher policy decisions, monitor the markets, and analyse the issues impacting the Kiwi economy. Let's get into it.
Hey, welcome back to another episode of Markets, Mystics and Mayhem. Today's episode is all about trade. It's quite a topical conversation right now, given all the global trade policies, conversations happening around the world. But we thought, actually, let's take a step back and actually see, how is New Zealand's trade performance actually doing? And we've actually had some good news to end the year. We've seen an improvement in our terms of trade, and I think we expect that sort of trend to continue. But let's get into it. First of all, let's take a step back and define, MJ, what are these terms of trade anyways?
Yeah, so terms of trade, it's, I guess, a really good economic indicator that kind of gives you an idea of New Zealand's relative strength, the relative strength of the New Zealand economy on the global stage. So terms of trade, it's the ratio of prices at which our country sells our exports against the prices we pay for our imports. And I guess put even more simply than that, it's a measure of our purchasing power, of how strong our purchasing power is with the rest of the world. So an increase in our terms of trade means that we can buy more imports for the same quantity of exports. And the last print we've seen for the end of last year, we saw an improvement in our terms of trade.
Yeah, and what's really been driving that has been, I guess, an increase in prices for two of our major exports. So dairy prices are up about 3.5%. Meat prices were also up 7% over the quarter. Overall, really seeing signs of a recovery in global demand for these products. How's that feeding through into the volumes that we're seeing as well?
Yeah, it's really good news because with these higher export prices, we're seeing that our rural regions are really taking advantage of that. And we've seen meat and dairy manufacturing sales volumes also up in the quarter, again, 3% up, which is really good news because you're making use of those higher export prices. So our primary sector, at least in aggregate, is really starting to improve in terms of its health. There are still some sectors within that, forestry, they're still kind of struggling, maybe because of the global demand, particularly in China, not being quite back up to full recovery. But in aggregate, we are seeing the health of the primary sector improve, which is good news.
And obviously, a lower Kiwi dollar is probably helping the space. It's not quite a perfect storm, but I guess a perfect combination of events that, the lower Kiwi dollar does mean that our exports are sort of more favourable and more competitive in the global space. And I guess we kind of expect that trend to continue for a bit longer, at least until the second half of the year, while the Kiwi sort of trading a bit lower.
Yeah, we've really seen the Kiwi weaken against the stronger US dollar. Just again, this global uncertainty has really seen the US dollar really strengthen in recent times, but it's put some downward pressure on our own exchange rate. But yeah, you're getting, for farmers in our rural regions, it should be a pretty meaningful boost to export earnings and their incomes. You've got high export prices, pretty strong production, both in terms of dairy. Milk production was really strong comparing to last season. So you put that against a favorable US NZ dollar. It's pretty good for our farmers, and they are kind of the backbone of our economy. So to see they're improving.
Good for our farmers and also good for our overall growth and recovery in the economy because, our exports make up about just under a quarter of our GDP. So it is good to see this momentum growing.
Yeah, and one thing that Jarrod's said to us before is when you see an improvement in terms of trade, it's almost a direct improvement to farmers in terms of the spending that they get from it. It goes straight to their back pockets. So it's going to see, a pretty meaningful increase in spending within those regions. You might see spending in those rural regions outpace spending in our more urban centres like Auckland, Wellington, which we know is doing not the best right now. But that primary sector health is really quite important for our recovery.
Yeah, it'll be really interesting, I guess, come sort of close to the second half of this year when we do our proper regional look to see if this trend is still proving strong.
Yep.
But yeah, totally right. You would see a direct impact. And I think the higher dairy payouts as well are likely to help in that space too.
Yeah, I think just with what we're seeing in terms of activity now, it's improving the outlook. So I think Fonterra, they're all forecasting record high payouts. So that again, good news for that space.
Yeah. That said, it's still not easy out there. There's still quite high costs, right, for farmers, from fertilizer to feed. Things are still a bit tricky, but definitely some good news on the horizon, and the outlook's looking a bit better there.
Yeah, for sure. You don't want to diminish those higher input costs. That is eroding some of that profit margin a little bit, but the lower dollar and higher export prices is kind of helping offset that.
Yeah.
But I guess that's the commodity price,
Mhm.
the commodity space of things. A weaker dollar is also helping our tourism sector as well, and
Yeah.
that is one sector within the economy that hasn't quite bounced back to its full strength post COVID, right?
No, it's getting close though, and to be fair, like you can't discount that we actually did see quite a remarkable recovery even once the borders were opened again. People used to say it would take years and years and years for tourism to get to anywhere close to what it was pre-COVID. But actually, we saw COVID had a really strong bounce back. It got to about 80% of pre-COVID levels, and then it kind of has just stayed there for the past two-ish years. Every time I look at the monthly data, it's tourist arrival numbers or short-term visitor arrival numbers, 80 to 85% of pre-COVID levels. And it's kind of been the same for a while now, although I think we're coming to the end of that. So if we look at the latest data that came out, at least for visitor arrivals over January, they were up 93% of what COVID levels were. So I think we're starting to see an improvement there. What we've seen, since the return of tourists is that we've had tourists come back, but there was one segment of the market really missing, and that was Chinese tourists. That was that missing 20%, which I think, seeing tourist levels get to about 93%, I think we're starting to see a bit of a re-entrance of Chinese tourists into the market. And I think, their economy is still quite soft, but potentially seeing some green shoots there.
Yeah, I think that really was the missing piece, and that's why progress in that recovery is really stalled because we just haven't seen those Chinese tourists come back. Every time we kind of get close to our summer period, we think this is the time we're going to see a full bounce back, but they've really been held back by, it's a long distance to come to New Zealand from over there. So there's not a lot of, I guess, pro points to come to New Zealand, but that weaker dollar should really help. That foreign currency becomes a lot more valuable when they do come to New Zealand. So that is, I think still some upside in that tourism sector.
Yeah, and I mean, it'd be great to get back to where we were pre-COVID levels, because I think we got to the point where tourism was actually our biggest exporter. It outweighed dairy, meat, all the others, logging, forestry stuff. And it made up, what, 20%? 20% of our exports, and we're getting close to that, but still getting there.
Yeah, it's interesting to see how tourism really has performed. Yeah, you're right. It was, I think, 20% of total exports were accounted for by tourism. That dethroned dairy as the top export earner, but come COVID, it just went plummeting down. 2% is what they accounted for in terms of total exports. That has started to improve, and I think today it's around 10%. So again, upside there, but it really requires a full return of those Chinese tourists to come up and spend large.
Yeah. But I guess the outlook is still positive. Like, we expect this trend to continue. We expect the Chinese tourists to be back eventually, and same goes for dairy and meat prices. I think with globally, central banks have been cutting rates, and it's been fueling the global recovery. We do expect our exports to perform better. But I guess there is, amongst all of this, there is one sort of headwind and one potential risk. Do we want to talk about that?
Yeah, let's talk about that.
I mean, we've talked about it a lot, and
Yeah.
it's just Trump and his trade policies, and I think the damage it can do to our exports if we do see that Trump's trade policies are more of a global slowdown as opposed to inflationary and pro-growth, then we could see that, we know commodities don't do well in a global slowdown, and we're a very commodity-driven export nation. So it does play a bit of risk in the outlook, doesn't it?
It really does. It's this, if we take away the Trump tariff policies and all that disruption, you're right, with, global monetary policy easing, it should mean a recovery in global growth, and that is our expectation. But you put this tariff policy on top, it really clouds the growth outlook. So it could, disrupt people's movement. So we may not see. It's another headwind for our tourism sector. If countries become very insular and they just look to their own manufacturing, it could really hurt our exports as well in terms of the agri space. So it is a big risk in terms of our growth outlook for sure.
And it's a pretty big risk because I guess if you look at the trade policies and the tariffs that have been put on so far, I mean, you look at New Zealand, we're not in the direct crossfires, which is great. But then you look at, okay, who are our largest trading partners? China, definitely in the crossfires. Australia now has that 25% on aluminium and steel. That's not great. They're our second largest trading partner. And then you've also got US is in the center of all of it. And in going back to that China story, they've already got a weak economy. If this hurts them more, then maybe we won't see that, return to 100% of pre-COVID levels for our tourism levels. So definitely something keeping us up at night a bit.
Yeah, I think that's really where it gets kind of concerning for us, is when we see that trade war between the US and China really escalate. Yeah, again, we may just fly under the radar with the US and Trump's policies, but it's when they really go at it that we'll get hurt. A lower Kiwi will provide some offset to that, but you got to think about our exports in terms of dairy and meat if they all back away, because actually the US, they've slightly overtaken Australia as our second export destination.
Yeah, I
so
saw that.
They're pretty important in terms of our trade.
But I guess at the end of the day, this is a lot of volatility that we've already talked about, and I think it's hard to ignore, but we kind of have to try and look past the volatility. And I think if there's anything that these trade policies and the volatility has probably taught us, and I say taught us, but actually I think we've known this for a really long time, is that we really do need to look at diversifying trade as much as possible. Because I think, I don't know if you know these stats, but do you know like how much of our trade is just concentrated around China, Australia, US?
I mean, I would say it's a lot. And that's exactly right. There's so much noise in these tariff policies. We'll hear one thing in terms of a tariff announcement that gets walked back on the next day. So it's very, very volatile, very uncertain. But yeah, you're right. The key thing to note here is just to look through the noise and see how this is an opportunity to expand and to go into develop new export markets. India is always the very first one that comes to our mind, isn't it?
Yeah, and I mean, we know recently Chris Luxon is actually over there trying to sort out a fair trade agreement, free trade agreement, which we've tried to do in the past. I think it's officially been around 10 years since New Zealand last tried to get a FTA with India, and I think it obviously comes with its challenges. But if we look over at Australia, I know that they implemented an FTA recently. I think it was around 2022, and I guess the point of contention has always been around what happens to dairy, because I know India has quite a large number of small dairy farms that really support their economy, and they obviously want to protect that. And I think everything I've been reading really has been about, start with the low-hanging fruit, start small. What about the other exports that we could send over there? And that's what Australia has done as well.
Yeah, I guess, we're not breaking new ground here. If Australia's done it, it's definitely a place for us to look into. But it's not just India. You could look into other Southeast Asian markets that are growing. So, potential there for us to develop a market there.
Yeah, and that's actually exactly what I've been kind of telling people as well. I was on the road last week, a couple presentations, and a lot of the questions were around, Trump and his trade policies, and also given Christopher Luxon's trip to India, like what's coming from that. And it's been the same message, that opportunity to use this as an opportunity to diversify and help us get through that volatility. I think it's really important, though, that, we do look through that volatility and look to the outlook, which is, a hopefully brighter outlook and improvement in our trade, as we're already seeing. I think there's some green shoots there. And in the meantime, that lower Kiwi dollar is going to help sustain that as well and drive a bit of growth in that sector. And I think, that'll definitely help our domestic recovery as well. And I think, it'll be really interesting coming back in a couple of months, sort of midway through the year when we look at the regions to see how this recovery affects different parts of the country. As you said, farmers do tend to feel a greater impact when terms of trade are higher, and we could see spending diversify across the regions.
Yeah. I mean, this is all just good news to see finally some growth and some positivity coming out from our economy, and no less that it's from the primary sector. So hopefully we see more of this going forward. And again, that regional, it's going to be very fun to play and see who's performing and where the growth is coming from.
Yeah, it's all part of the recovery, right?
All part of the recovery.
And that recovery is coming. But I think that's all we've got time for this week. If you like the episode, be sure to follow, like, and subscribe, and we'll catch you next week.
You've been tuned into This is Kiwi Economics, Markets, Mystics and Mayhem. We'll be back next week for more analysis and insights.